whole, were some of the AI features like summarizing your text and web pages, transcribing audio, the Genmojis were a big favorite. Does that really move the needle? It's hard to say at this moment, but I think the real long-term play here sits with that digital assistant longer term.
Yeah, and at least it's moving the needle for shares this morning. Again, a delayed reaction, but still a positive reaction right now. Who didn't have a positive reaction, of course, is Elon Musk, threatening to ban Apple devices if they integrate OpenAI at the OS level. What do we know about that, Jackie?
We know that Elon tweets what he wants, but when we look at what Apple actually said yesterday with regards to privacy, here is where they emphasize that just because they have this relationship with OpenAI does not mean that that privacy ethos and priority goes out the window. People have the option to opt in or out of when Siri asks you a question and then it goes to ChatGPT. Not everyone has to opt into that. It also said that it's not shipping off data to OpenAI as well. So there's a real difference between kind of the concerns that Elon Musk is outlining here, how that actually materializes within the operating system that OpenAI has some access to. I mean, it's kind of hard to say what exactly Elon is targeting here, but for anyone that knows Apple products, you know that privacy is the major focal point of what makes them such a trusted source of devices.
All right, Jackie, great reporting this week. Really appreciate more of that this morning. Our thanks, of course, to Bloomberg's Jackie Davalos. And let's go back now to Margie Patel of Allspring Global Investments. So Apple shares higher right now. They've kind of been the laggard of the Magnificent Seven so far year to date. And let's talk about tech here because, I mean, at this stage of the game when tech is so big, it's such a heavy weighting, it feels like you can't necessarily ignore it. How are you thinking about tech in light of valuations right now?
Well, actually, I think valuations are rather reasonable considering the growth that many tech companies have looking forward, not only high secular growth and cyclical, but also compared to the rest of the economy, especially if we're in an economy that's going to be growing, say, at 1.5% to 2.5%. That says that sectors like tech that have a lot of drivers, like artificial intelligence, will frankly continue to be outperformers. So we think tech is a little bit volatile, except for NVIDIA. A lot of the names have taken a little rest here, but we still think it's the place to be for 24 and 25.
That's interesting. So basically, the narrative there is that basically the fundamentals, they justify the valuations. When you look at it through that lens, if I'm understanding you, it looks reasonable here.
Yes, or certainly within the range of average historically, and particularly because we have not just artificial intelligence, but we also have other trends, automation, industrialization using more and more tech, reshoring of tech, and just the components of tech going into every product that we use. We think there's still a big long-term secular story across the economy, so we think they still will have surprisingly good earnings and better than the average company in the rest of the economy. So we think it's a sector to stick with.
So that point, tech and AI in particular, going into every product that we use, I mean, how do you invest around that if you take a look at the rest of the market, at other industries? I mean, how far can you follow that narrative?
Well, at this point, it's still pretty early because there's a lot of excitement, and exactly how much artificial intelligence is going to contribute to the bottom line, especially when you balance against capital expenditures in order to achieve the AI. We think the jury's a little bit out, but just looking at the general picture of tech, we think that it's still going to be a good investment, and we pretty much like it across the board.
And how good is good? When you think about the index level, for example, are we talking high single digits? Are we talking double-digit returns when you look at the entire scope of the year?
Right. Well, even if so far this year for the first quarter, profits were up about 10%, and that was made up of some sectors a lot better, some sectors a lot lower. But if you say, well, you know, technology revenues and earnings should be up even in that 8 to 10% level, which would be much lower than they've been for the last couple of years. That still says that valuations are reasonable, and I think that'll be above the average earnings growth compared to a typical S&P company away from the tech. So that's why we think maybe a little volatile. There may be a little bit of price earnings compression as we look into 25 with, say, a lower rate of growth than we've had this year for many of those companies. But when the fundamentals are strong, it's hard to, it's basically where else can you go besides tech that has such great fundamentals and growth?
Yeah, it definitely feels like it's a bit of an all-weather bet here. And some of those return measure levels that you mentioned, certainly better than cash, where a lot of people are hiding out right now. But before I let you go, Margie, I am curious. So clearly you like tech, but where are you avoiding right now? What parts of the markets are just not worth playing in?
Well, real estate is an obvious sector where we really don't have any exposure to. The financial sector on balance has been a little bit disappointing, except for a few names. So we don't see if the market is going to do better, the economy is going to rebound. We think other sectors are more sensitive and have more opportunity. And we think utilities are not really going to share in too much of the hype over data centers. So we're pretty lukewarm on utilities.
Interesting. Maybe that data center story a little bit overblown when it comes to utilities. Margie, always great to speak with you. Really appreciate your time this morning. Our thanks to Margie Patel of Allspring. Now, still ahead, we're going to take a look at the companies making the most social buzz today in our Social Climber segment. Up next, this is Bloomberg. All right, it's time now for Social Climbers. A look at the stocks making waves on social media this morning. And first up, Spotify will introduce a new premium plan later this year, according to a person familiar with the matter. It will cost at least $5 more per month and include better access to better audio and new tools for creating playlists and managing song libraries. Next up, an FDA advisory panel deemed Lilly's Alzheimer's drug effective and recommended U.S. regulatory approval. Analysts cheered that recommendation, of course, with Cancer calling the unanimous panel vote better than expected. And finally, Golden Goose and its shareholders are seeking to raise about 560 million euros in the luxury sneaker brand's IPO. This gives them an implied market value of as much as 1.9 billion euros. Now, Bloomberg reported earlier that Golden Goose could be valued at about 3 billion euros. And of course, you can follow all the latest company buzz on TREN Go on your Bloomberg terminal. Meanwhile, you take a look at these markets. markets right now. We're still lower right now. If you take a look at the S&P 500, down about 0.3% or so. The NASDAQ 100 sort of clawing back here, but still underwater right now, down about 0.2%. That's even though Apple shares are at an all-time high, rising about 3.4% to a fresh record for the stock. It certainly has felt like a while, but even still, your big tech benchmark lower on the day. That's even with 10-year yields currently lower about 2 basis points. A bit of a rally in the bond market, maybe giving some breathing room to some of those big tech stocks. Meanwhile, coming up, the U.S. continues to lag behind the world when it comes to EV adoption. We'll be speaking to Daniel Burrell. He is RE Automotive CEO next. This is Bloomberg.
It's great questions.
Well, RE Automotive is looking to ignite commercial transportation. Its proprietary technology is helping to electrify commercial fleets across the globe, and it's working with names such as U-Haul and Airbus. And for more, we're joined now by Daniel Burrell. He is RE Automotive CEO. And before we get into, of course, the landscape for commercial EVs versus personal EVs, tell us a little bit about your technology and the chassis that you produce.
Of course. So we're a tech company in essence. We're an automotive tech company. And we build software-defined vehicles, commercial vehicles that are used by the world's largest fleets. And when I talk about software-defined, it means by wire. So we have eliminated all the mechanical connection, if you like, between the wheels and other components. On one hand, simplifying the vehicles, but allowing them more benefits like better safety, better efficiency, utilization, and unit economics. And we've been doing it for almost 10 years now.
And so are the benefits of sort of moving to that versus maybe the traditional car with an axle, et cetera, where everything is connected? I mean, how does that actually impact performance and how it feels when you drive it?
Well, these are two very good questions. The first one is that all the benefits are, it's built on computers, right? It's software. So it's more accurate, it's safer, it has more redundancies, it yields better unit economics for the fleets who are using it. So they can actually make more money on each vehicle. And how is it to drive them? It's actually quite amazing. They accelerate better, they perform better, and from the hundreds of test drives that we've done with leaders in the industry, they say that riding our trucks, which is about 16,000 pounds, is like driving a mid-size SUV.
Interesting. So, I mean, for example, U-Haul, the partnership you have there, U-Hauls are often driven by normal people, your average person on the street. And I mean, reading through some of this, I was wondering, do you need special training to operate these vehicles if you go and rent a U-Haul, for example? No,
you drive it like any other truck. So with U-Haul and Penske and others that we work with, you basically drive it like any other truck. And the feedback is similar to any truck you need. There's no special training.
And so talk to me about how REE Automotive sort of fits into the commercial EV landscape, because I was reading through your recent earnings call. You called it a go-to-market strategy of complete, not compete.
Yes.
So you're not exactly taking share necessarily from some of the other commercial players.
No, we're not. That's exactly it. We think that it needs to be a group in order to make that transition into electrification. And the only way to do it is working together. So we've developed a capability to work with others as opposed to competing. So we have basically three ways of bringing our technology to market. One, we're a full flag OEM and you can buy our trucks. And second, you can just buy the chassis and build a truck on them, if you'd like, or we're working with other OEMs, which are supposed to be our competitors, but we're not competing with, and we're giving them our REEcorner, our by-wire technology, for them to implement in their chassis.
And what is the bigger part of your business right now? I mean, is it selling those full vehicles, getting orders for those full vehicles, or just the chassis, which kind of look like the skateboard or so of the car?
They do look like skateboard. They're quite cool. We're selling trucks. That's the majority. We're the first ever to have an FMVSS certification on the by-wire system. So people have been trying to do it for decades. And by-wire is like how airplanes fly, right? They fly by wire. There's no mechanical connection between the stick and the flaps. But it requires at least two very, very skilled people to fly them, right? And tons of redundancy, and of course the cost is enormous. And we were the first one to be able to take that technology, bring it into auto for, like what you asked, everybody can drive in a much safer, reliable way, but without any special training. And I think this is key when you want to adopt a new technology. And by being the first, it's on us to bring it first to the market. So we developed it, we certified it, and now we're giving it to the world's largest fleets in parallel to completing others and helping them get to that as well.
And I want to talk a little bit more about the strategy, because you mentioned some of your big partners. You have U-Haul, Penske, Airbus, for example. Is the strategy to service many different fleets, or when it comes to what you're prioritizing, are you prioritizing sending units to maybe a couple of your partners, a select few partners?
Well, the long-term goal is to be the Intel Inside for automotive. That's the whole idea, that everybody will be using our tech and think we're on the path to do so. In the short term, of course, we prioritize our customers, and we usually prioritize them according to their maturity level in terms of being ready to adopt EVs. Because it's not swapping between ICE, internal combustion engine, and diesel to electrification is not apples to apples. You have to have charging infrastructure, you have to have the know-how, etc. And not everybody is fully ready. So when we see a fleet, for example, like Penske, who are very committed and doing an amazing job on electrifying their fleet, ready to adopt, then of course we prioritize.
And let's talk about EV adoption overall, because the U.S., it feels like we've lagged behind the rest of the world, both when it comes to personal EV demand. That's really, I think, disappointed a lot of bullish forecasts. The narrative out there is that commercial EV, that industry is faring a bit better. But how does the commercial EV landscape compare to the rest of the world, for example?
So first of all, you said rightly, it's very different, commercial EVs and passenger EVs. One, it's not a B2C, it's a B2B. And second, it's driven, one, by commitments of fleets to go carbon neutral, and they've pledged. And second, with a lot of incentives and paid by governments, for example, here. And we're just starting to see the adoption in the commercial vehicle market for electrification, where passenger vehicles are a bit more saturated, but the opportunity and demand in commercial vehicles has just started. And yes, you are correct, the US is slightly behind, but I see this as a huge opportunity because now we're ready. Mm-hmm. We are ready as of January this year when we reached certification and we're able to start providing vehicle to customers, and this is the time for us, the perfect time for us to grab that market opportunity. And I'm actually quite happy that it's now opening up, and it's enormous in terms of TAM, the total addressable market.
So still a bright outlook when it comes to the commercial U.S. EV market. I do want to talk a little bit more about your business because you're based in Tel Aviv, of course. And I mean, you think about the post-October 7th world. What has operating the business look like?
Well, it's challenging. It is. I can't say we're not affected. We have made several changes over time. It's been going on for quite a long time. Mm-hmm. Where for us, the majority of our headcount is actually outside of Israel. So we have a big presence in the UK, and we also have manufacturing capabilities in the US. So the manufacturing and development is actually done in the UK and the US, so we're less affected compared to others. But it is tough. There were days where we were having to run to shelter 6, 7, 10 times a day during meetings, and you sit in a meeting like now, mm-hmm. You ask people on Zoom, sorry, and you come back after 10 minutes just in order to sit for a few more minutes and run back. And of course having to send our guys to the reserve forces. But I think we're doing a good job in terms of being disciplined, still meeting our targets, even though those challenges, and we intend to keep on meeting our targets.
Well, we really appreciate your time today. It's great to meet you. Our thanks, of course, to Daniel Burrell of RE Automotive. And meanwhile, about an hour into this U.S. trading day, let's get a check on these markets. We're going to do that with Bloomberg's Abigail Doolittle. It seems like we're having some technical difficulties, so we're going to come back to Abigail in just a little bit. Coming up, a major media executive is interested in buying Paramount's parent company. We'll discuss the details with Eric Gordon of the University of Michigan Ross School of Business next. This is Bloomberg. right, it's time now for our daily Wall Street Week conversation. And media executive Edgar Bronfman Jr. and Bain Capital said to be teaming up to buy the parent company of Paramount. They're considering offering more than $2 billion for National Amusements. And joining us now to discuss, we have Eric Gordon. He is a professor at the University of Michigan Ross School of Business, as well as Wall Street Week's David Weston. And David, man, this is a messy one.
Yeah, you certainly need a scorecard to figure out what's going on, who the players are here. So Eric, thanks so much for helping us sort this out. First of all, we hear about Edgar Bronfman and Bain. He's not the only one in. How many people are bidding right now? And maybe more important, what are they bidding for?
They're bidding ultimately for Paramount. Now, it's a complicated ownership structure that we can get back to, how you get ownership of Paramount, but that's what they're trying to get. And Paramount, of course, is not just Paramount Movies, it's also CBS, MTV, a bunch of cable things. Who's actually actively bidding? We're not totally sure, but so far we've had Skydance, which is David Ellison, son of Larry Ellison of Oracle fame, have made a run at it. Apollo made sort of a run at it. There was talk that David Zaslav of Warner Brothers Discovery made a run at it. So there are multiple players, and who's the lead horse at this point? It's not entirely clear.
And I mean, we're also talking about when you have Sherry Redstone and basically the board, and then you have everyone else, all the non-voting shareholders. Again, it's a very complicated deal that we've been tracking over the past several months. When it comes to the non-voting shareholders, who's looking out for them in this process?
Lawyers. So there is a duty that Sherry owes the non-voting shareholders. She owes it to all of the shareholders. And because she calls the shots. She can decide yes or no. She has to be careful to be fair, to run a process that's fair to the non-voting shareholders. If you go online and buy a share of Paramount, you are buying a share that has no votes. All of the votes are in shares owned by a group that ends up being controlled by Sherry. So if the non-voting people like you and I, we own shares in Paramount, our protection is the threat of lawsuits that say, hey, you didn't treat us fairly, you lined your pocket at our expense, and we're going to go to court and we're going to rectify that.
So Eric, given that possibility of litigation, and we have seen litigation in other contexts like this, where courts have really been upset with what was done, how do they protect themselves? And by they, I mean not just Sherry Redstone, presumably the board, maybe a special committee of the board. I mean, who are the various players here that need to protect themselves to make sure it's fair?
So think of a bunch of groups. Think of the management team. Now it's the office of the CEO with 3 people. So the senior officers, the directors, and then when deals are being done, directors usually say, we'll put together this special subcommittee of directors who will kind of run the deal and report to us. They and Sherry have the fiduciary duties, and what they do is they run a fair process. They run a process where they can show that, look, this process not only was fair, this process was designed to get the highest reasonable value for all shareholders. What value we ended up getting is whatever we ended up getting. But David, it focuses on the process. What the court looks at is not the dollars and cents in the end. They don't want to second guess that, but they will second guess the process. So did you fully inform all of the shareholders whether they vote or not? Did you kind of try to get people to compete and give the highest bid? Was that bid composed in a way that paid Sherry and the other shareholders fairly? So it's all about documenting a process that's reasonably designed to get the highest value for all shareholders.
And so I take your point on the emphasis of the process here, of course, how the bid is actually being formulated and how it goes through. But let's talk a little bit about how you actually assess value here, because we're talking about National Amusements, which of course controls Paramount, and the bids coming in for Paramount, but you, of course, are also bidding for National Amusements. I mean, how do you come up with a fair value for a company such as this one that's structured this way?
Well, Katie, that's a good point. The more complicated the ownership structure and the more complicated the deal, the harder it is to compare apples and apples, because you're not comparing apples and apples. And the requirement is that you get the highest value, which doesn't even mean the highest price. Maybe the highest price is somebody who you don't think will close the deal because they can't raise the financing they need, or they can't close the deal because of antitrust concerns. But when you have a deal that's put together with this many complications, comparing them, it is really tough, which is why the court is going to look and say, well, let's look at the process because we can't actually tell whether this complicated bid is worth more than that complicated bid, but we can understand your process.
Let me add one other level of complexity. This is a media company last time I checked, and the media industry overall is in a lot of turmoil right now. The valuation of any of these companies is up and down and all around. We're not sure particularly about the future. So how does that figure in to try to assess the valuation here? Again, bearing in mind we have a private company, which is National News, that owns controlling interest in a public one, Paramount.
Even with a public company, Paramount, which is Paramount and CBS and MTV and BET, it's hard to value those assets because the value of those assets is changing. The crown jewel is probably CBS, the network, but those networks are probably declining in value. The cable channels are probably declining in value. Streaming is changing the value of the old assets. So how do you value the assets? How do you look to the future and say, going forward for the next 5 to 10 years, what are the actual value of these assets where we know that those values are changing? We don't know how fast, how deeply. We don't know what Paramount can do to change things. They said in their recent annual meeting, we're going to cut $500 million in costs. We're going to sell some of those assets. We're going to invest in content. But even if this was a simple deal structure, what is Paramount worth? That's a tough question.
And so you wrap all of this together, all of these different moving pieces and these complicated structures, and what's your gut tell you about how this plays out? What's your best guess as to what the process actually ends up looking like?
I will venture that there's a 50% chance that nothing happens. That in the end, Sherry says, this is too much. I will just keep the company. I'll build its value, and I'll sell it in 2 or 3 years, because the value of this company has really gone down. This company went public about 3 years ago at $85 a share, and today, here, I'm looking at the terminal, today, oh wow, today it's at like $20. So she might just keep it. If she doesn't, I suspect it goes to Skydance and Ellison because they're the furthest along in the process.
Well, that would certainly be one of the biggest twists of all. Maybe if Sherry Redstone doesn't sell in the end at all. Eric Gordon, really appreciate your time today. So enjoyed this conversation. Our thanks, of course, to Eric Gordon of the University of Michigan Ross School of Business. And David, who else do we have coming out?
Well, tomorrow we're going to have Ariane Simone. She's the head of Fearless Fund. You may have read about that because the Court of Appeals in the 11th Circuit has just said that it cannot give out grants to black female business owners because it violates the Civil Rights Act, believe it or not. So we're going to talk to her about exactly what's going on in that case.
All right, looking forward to that conversation. Our thanks, of course, to David Weston. This is Bloomberg.
Wednesday, the Fed decides.
What data is important?
What would it take to reintroduce the rate cut conversation?
It's the labor market cracking that's going to allow the Fed to really enact some of its easing.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
Inflation is still too high, and the path forward is uncertain.
They believe that policy is sufficiently restrictive.
The Fed can only deal with the data that it has.
Bloomberg Surveillance, the Fed decides, starting at 1:30 p.m. Eastern.
All right, we're going to try this again because Abigail Doolittle standing by with a check on these markets.
Hey, Katie, thanks so much. And it's interesting because the risk-off tone that we were talking about earlier, well, it's alleviated just a little bit. We were talking about it in the context of Bitcoin being down and that Bitcoin crypto can be almost a new VIX. So when it's down, it's risk-off. When it's higher, it's risk-on. Well, the S&P 500 at the lows down 0.6%, the worst day in the month of June. But we're seeing a pretty decent bottom here, almost a little mini intraday V bottom. I don't believe it's on data. I think that it's probably what you were saying, Apple. Let's take a look at Apple. Bouncing in a big way. We have a new record high on the shares of Apple. My gosh, up more than 5% on the day. Yesterday, of course, the stock sold off more than 1% on the news that came out of the Worldwide Developer Conference on AI, the partnership with OpenAI, but maybe a little bit underwhelming. But investors seem to be changing their mind today. We'll be taking a look at whether that change in mind will continue or if this is some interesting activity on the part of buyers who may be looking to sell soon. Snowflake up 1.6%. Morgan Stanley saying that the recent data breach that it has essentially it was isolated, it's been resolved. Eli Lilly. Earlier today, it had been up sharply in the pre-market. It's been up over the last 3 days, up more than 4% over that time period. And FDA panel basically said that their Alzheimer's drug is effective and that it should be approved. There we have a small gain on my saying that. Maybe no, I'm just joking. And then Tesla down 2.6%. JP Morgan saying that the robo-taxi, that while they're having the event in August to announce the concept, maybe even an app, it's unlikely to come into any real fruition for a few years. Let's turn back to Apple, though, since it does have such an influence on the market, Katie. This is a really interesting chart. It's a little bit busier than I would like, but the bottom panel is necessary. So you can see over the last year, roughly trading in this range between, let's call it 165 and 200. When it goes down, the RSI comes out of overbought territory. That's happened 2 times. Right now, though, take a look at this move right above resistance. The question is whether or not it will hold based on the RSI, although the RSI is trying to come up too. It's going to be really interesting here, Katie, to see whether or not the bulls can get it together to come out of this range. It could be a rare triple top, less likely that it's that exact pattern, but it does seem more likely that the stock goes back down into the range. But the bulls really trying to not do that today. So one to keep an eye on in a big way.
Yeah, absolutely. Our thanks, of course, to Bloomberg's Abigail Doolittle. And on that note, let's take a look at some other stocks hitting highs and lows. As we mentioned, Apple was hitting a high. General Motors, too, was also at a high after announcing plans to buy back up to $6 billion of shares. GM shares currently up about 1.6%. There you go. There are the highs. Let's talk about the lows, though, because Wendy's hitting a 52-week low amid heightened competition and growing investor concerns, down about 0.7%. And then you take a look at Diageo. Diageo hitting a 52-week low as distillers face inflation-weary drinkers in the U.S., weighing shares down by about 0.6%. Now, coming up on Bloomberg Television, we have Laura Martin. She is Needham's senior media analyst. She joins Bloomberg Technology up next. But that does it for Bloomberg Markets. I'm Katie Greifeld, and this is Bloomberg.
of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York. Ed Ludlow, he's off. This is Bloomberg Technology. Coming up, we'll bring you the full recap from Apple's annual developers conference as shares rise to a record following the company's event. Plus, we'll break down comments from Elon Musk as he says he would ban Apple devices from his companies if OpenAI is integrated into the operating system. And troubled French IT firm Atos, it picks a winner for its bailout. We'll discuss that and the state of French tech and so much more throughout this hour. First, let's check in on the French markets. Let's check in on the macro perspective more broadly. Look, a little bit of anxiety as we run towards the Federal Reserve, that CPI print. But more broadly, we're managing to see tech once again on top, thanks to Apple. Of course, we're up 0.2% on the Nasdaq. The CAC 40, though, having a woeful time in France. Political risk, some anxiety, some rumours swirling that perhaps even Macron could step down if indeed that legislative vote that he has just called doesn't go his way. But that has been suppressed and denied by people close to him, but we're still off by 1.25% in France. We go to some of the interesting fundraising and news coming from France a little bit later in the show. Crypto is under pressure, off by almost 4%. Interesting correlations. Basically, when bonds sell off, so does Bitcoin, and bonds are selling off today. Crypto off by some 4% as we head towards those macro events. Move on and have a look at what's happening on individual movers, and I'm only singling out one. I'm looking at Apple, rising to yet a new record high. We're now up more than 5%. I thought yesterday we were a little bit like unawe-inspired by some of the announcements coming from WWDC, but seemingly we're now thinking this will drive the purchases of new phones. Let's stick with it. Shares, as we hit this record, we want to delve into the AI announcements. Some of it mixed, but one tech titan has a pretty hot take. Elon Musk saying he'd ban Apple devices from his companies if OpenAI's artificial intelligence software is integrated as the operating system level, calling the tie-up a security risk. We want to get into the announcements. We want to get into Elon Musk's take. Bloomberg Mark Gurman here with the AI breakdown. Kurt Wagner, of course, an author on all things Elon. And Mark, I want to start with you because surmise the market reaction. You thought perhaps some of it was a bit lackluster, but the market seems to be liking the fact that we might buy some new iPhones on this.
I definitely don't think this is going to drive iPhone 16 sales this fall in any significant way. I do think that over time, this is going to seriously drive sales of follow-up iterations of the iPhone, maybe the one after, maybe the one after that, maybe the one after that, and well into the future. I do believe it's going to enable a set of a new generation of Apple devices, things like AR glasses, home robots, enhanced AirPods with AI and cameras. So this really sets the stage for Apple's future. Now, the most important part here is Apple no longer has to worry about the risk of people switching away from the Apple ecosystem, seeking a more AI-ified phone. Apple now has the same functionality that Samsung has, that Google has, that other players have in terms of deep AI integration into its devices. So I think from that standpoint, it's a positive, and that's making the street quite happy. I think they're digesting. There was a lot of stuff on Monday at the Worldwide Developers Conference. I think they've been going through what the Apple announcements were, and they see how comprehensive the set of tools that Apple's offering here with a quintessential Apple spin with its privacy standpoint and very deep integration.
Let's talk about privacy and integration, Kurt, because privacy has been called into question by one Elon Musk because of the integration with ChatGPT. And Kurt, can you just keep us up to speed with what Elon Musk is accusing here?
Yeah, well, Elon is basically saying that if ChatGPT is infused at the operating system level of these phones, that, it would have access to all of the data on the phone, which would go to Apple and then go to OpenAI. What you have to remember, of course, is that Elon has a lot of incentive to, see this idea that this is an unsafe and a privacy issue, because he is building a direct competitor to ChatGPT with his XAI business that's building Grok, its own chatbot. So I do think that this is the kind of thing that he is, incentivized to do, to kind of pour cold water on this partnership, to, make people question or doubt whether or not this is done above board because he stands to benefit here with his own business and his own companies building a rival product.
Well, Mark, apart from going to Tim Cook with this, we go to you because I don't know anyone who can help square us up on whether this is a key privacy risk better than you could. Mark, what do you make of some of the accusations and whether or not this integration would open up any privacy concerns?
Well, first of all, I completely agree with Kurt, right? Elon Musk doesn't have the best of relationships with OpenAI, and Sam Altman, for one, doesn't have the best relationship